this week and all the new changes that have been implemented. But if you're a campus agent, I think you have been overtrained by standards. So by now, you know what to do, gotta do it, and how to get it done. But like always, if you have any questions, the entire team is here for your support. But today we are here for Ask the Lender. And my co-host is none other than regional area manager, Mr. the one and only Ruben Crispino. And Ruben, I know
Hey,
there's people, believe it or not, watching and listening, they don't know who you are. So if you want to give a quick intro, let them know who you are, what you do, and how long you've been doing it. And it doesn't have to be
well, I
mortgages.
don't know. So I think a regional area manager, I don't think that's right, but I think I'm galactical manager. I'm just the manager of the galaxy, right? That's it.
Okay, intergalactical
Intergalactical
manager.
manager. No, but
I'll get you. I'm gonna. You know what? I'm gonna reach out and get you business cards. This is the
there we go.
intergalactical manager.
Intergalactical manager. No, Ruben Crispino, so you don't know me, Ruben Crispino, regional manager for CMG Home Loans. Been in the business since most of you weren't even born, 1989. And typically we have a set, I guess, content that we want to talk about every week. But I think this week we decided to do a true potpourri, open it up for questions. So no question hopefully left unanswered. If I don't know the answer, I will tell you so, and I'll get back to you.
Yeah. So Ruben, the first question I have is actually from Ernesto Vega himself. This whole year, everybody's been waiting for that rates to turn south. Everybody, and I actually believe that we were heading that way on Monday, and then yesterday it looked that way. And somehow, these are the most stubborn rates that I can recall. And I've been doing this almost as long as you. It's the most stubborn rate that I have ever seen. And I know that that we have such a strong economy that is what it is the economy is so strong, the rates are remaining where they're at because it's a strong economy. There's no, there's some weakness, yes, in unemployment. But everybody is talking about what could happen between now and the end of the year. Where will things be? We were going to have a late bloom summer buying season, and all of that was chatter. So I know it's impossible to predict, but what is your gut feeling telling you how 2024 rates might end?
So I think this was kind of predicted. If you really read between the lines, it's still they're heading down. The trajectory is down. It's just not going to go down like that. It's you're going to get up, going to be down, going to be up, going to be down. So Chris George, that owns CMG, which is what CMG stands for, has been saying this all along. So we are ready. In other words, we are ready for the onslaught of business that's going to come. There's just no way of telling us exactly when it's going to happen. I think for the most part, most I guess people who predict these rates are expecting a rate cut now in September. How much, nobody knows, but that's what the pundits are saying, which would help. And then when the rate comes, how long is it before we see it? Some people are saying a month or two, but you got to be ready, right? That's what we always talk about. As agents, as loan officers, we got to be ready when the rates do, start really looking a lot better. But it is going down, and it's just been a bumpy ride, to get us to where we're at right now. But they're significantly lower than we were at the beginning of the year. So this shouldn't stop anybody from buying. Remember, at CMG, we have the rate rebound program. So if they buy now, I mean, they find something now, don't let them tell you that they're waiting for the rates to go down. We have a program, we close them now, and we'll refinance them for free after 6 months. There's no risk for them. So we don't want to wait till the rates go down. We want you to buy yesterday. We want you to close these deals right away. We have the capacity and all the programs necessary. So a rate issue is very easy taken care of by the rate rebound program that we have.
And Ruben, me and you have a person that we admire online called Diana Oleg from CNBC, who's the most negative person in housing that there is. So Diana had just
Mhm.
had to come out about 20 minutes ago and say that July home sales outpaced any prediction that she had. So she was predicting the worst July going back to 1985, and it was a very strong July purchase home purchase and purchase applications, so it's buyers applying for loans. It is true the inventory, because she has to be negative, inventory is up 20% this year, and some markets are a little bit higher than 20%. But the buyer resilience is still there. The buyers are taking advantage of those opportunities that are in the market, jumping in and acquiring the home, because that same home that you want may not be for sale. Let's say you say, I'm going to wait till 2026 to see what happens post-election, and maybe there's a rate drop, a substantial rate drop. That house you want may not exist in 2026. And if it does exist, it's going to be substantially more. So I tell you what, I got a kick out of that one, because I know how every time I send you a Diana article, you're like coño, and I think this one is like, yeah, she's like, the buyers are out there, Okay, so that
So
was Ernesto question, and thank you for that answer.
It's easy to be right when you're wrong for a year, then you just go opposite what you said. You're probably going to be right the next year, right? So
that's what she did. She went completely different. Yeah, but inventory is increasing. That's so so
bad news.
team, everybody
Bad news.
listening. Yeah. Anybody has any question, you can turn on your mic, ask a question in the mic, or type it in the chat. I have a couple of agents that had asked questions already. One of them has to do with FHA. They're saying, that they keep seeing FHA advertising from other companies saying as low as a 540 credit score. Is that so that you can have such a low credit score for an FHA loan? I think that you might have a lot of other problems. You have a 540 credit score. I don't know if you're breathing, but
Yeah, so that is true. By the way, FHA goes down to 500. Okay, so not even 540, 500. We go down.
So now you're dead.
Yeah, exactly. Pretty much 500. Now that's a manual underwrite with a higher down payment. Okay, we go down to 580 at CMG. All right. So the difference is that when you do a manual underwrite, which is the people that have a credit score between 500 and 580, let's say 579, they also have to come up with a higher down payment. So now they're not actually coming in with 3.5% down. And again, I go back to a little bit what we were talking about a minute ago about bad news sells. I mean, you got to really read between the lines on some of these things that are being promoted. I think for us, we really work with these clients to try to get the best deal for them. Remember, the best business is repeat business. So we want to take care of that customer up front. It could be relatively easy, not on all occasions or all situations, to take that customer from 540 to 580, put them in a true FHA loan with a decent rate with 3.5% down. What we have to do with that is just start with them early and work with them together as a team. Like I always say, get together with your loan officer, make them buy you coffee, and sit down and work these customers together so we can get them up to 580. It's usually not that difficult. But yes.
Okay, Ed, you gotta buy me coffee, Ed. You gotta buy me coffee, Ed.
Oh no, I was talking about cafe. It's different.
Oh,
the Cuban kind or regular coffee?
Cuban coffee. You don't want Ed on Cuban coffee. I've seen him on Cuban coffee.
Okay.
I can't do it.
Okay, so then that product does exist, but you advise having that consultation. I mean, you always preach about meet that buyer. Maybe you want to wait 2 months and bump up that credit score so they get a better, a better picture instead of just rushing. Home ownership it's something that for us is a regular business, but for most people it's the only purchase, the largest purchase in their lives. So you wanna say let's sit down and see what we can do.
Yeah, absolutely.
All right. Okay, so then 540 does exist. It actually goes down to 500, but let's meet that. Let's sit down and meet this family and see how we better assist them. Next question is something that is a hot topic, no matter how you hold it, because some people are saying there's people living off their homes, and other ones saying that people are just buying time. HELOCs. How difficult is the HELOC process right now, and how much cash can I take out of my home? Can I take out of my home? This is one of the Canvas realtors asking.
Okay, so it's never been easy.
Let me ask. I'm asking them what's the value of the house and what is the current mortgage. If you want to start chatting, I'll throw that in there.
Okay, so it's never been easier. There's so many HELOC products out now. Some of them are very easy, maybe a little higher rate, maybe a little lower LTV. Depends on how you want to do it. We even have HELOCs now with bank statement programs. So if you have a customer or you yourself need a HELOC and you can't qualify the traditional way, there is a HELOC or HELoan for you. There's a program for everybody. Like I always say, it's just a matter of loan to value and rate, especially on the HELOCs. So they're pretty easy. Typically, the highest HELOC we'll do is a
I'm being asked what's a HELOC.
A HELOC stands for Home Equity Line of Credit. Okay, so basically, it's a loan, typically in second position. So you have your first mortgage, and then this will be your second mortgage on it. You have a HELOC and a HELoan, right? HELOC is a line of credit. HELoan's a permanent or a fixed amortization on a loan, usually for 5 or 10 years. But a HELOC is a line of credit that you can, borrow against and pay back and reborrow and repay back for many, many years. We can go up to an 89.9, so let's call it 90% combined loan to value. That's CLTV. So we take into consideration the value of your home minus the current mortgage, if there is one, and we can do the difference up to the combined loan to value between both loans up to 89.9%. So it's very easy. We're doing a lot of them. You started the question asking me kind of why, and it's exactly what you said. Interest rates on credit cards are about 30%. And we know the Americans have a really hard time telling their desires and wants and children and girlfriends and boyfriends and whomever no. So because they can't say no, they were spending a lot of money. And the credit card debt's up to one of the highest times ever in the country. So basically that's what they're doing. They're taking the money out of their home, which has a ton of equity now, and paying off those 30% credit cards with a line of credit, which again, depending on credit score, loan to value, type of loan, is can be somewhere between, let's just call it, 9 and 12%. Big savings over 30%.
Oof. Okay, so this specific case, property is worth between 700 and 750, and there's only a $200,000 first mortgage.
All right, so let me get on my handy dandy phone here because nobody has a calculator anymore. So you said it's worth 750?
Yeah, I'm sorry. I have someone in camera showing a calculator.
And you want to do it faster than me? I'm just,
Yeah.
So basically, we can
Read
lend
the
them up
question.
to. Well, I got it. You can lend them up to 675,000 minus the loan amount which is 200,000. So they can do a line of credit for $475,000. Math is not that difficult. Take 90% of the value again, assuming, yeah. And it's a line, which is kind of nice, right? It is adjustable. Okay, the lines are adjustable, which is a good thing now, especially because we expect the rates to continue to fall over the long term. So they get a line now. They do what they got to do. It's always available to them, and they can pay it down, use it back up, whatever they want to do. Doing quite a bit of those.
So it's a big credit card. It's a big credit card.
It's a cheaper credit card because remember the credit card has no collateral, right? They're going based on the good looks and charming personality and credit score of Ernesto Vega, right? They're not taking a lien against Ernesto's house. On a line of credit, we're taking the second position lien on Ernesto Vega's house. And that's if Ernesto's applying. Now, if you want to give everybody your house so they can take a lien against your house and get their own line of credit, that's fine too. We could do that.
We can talk about that later. Next question is, we had a whole presentation on this, everybody, but I'm glad that the questions are still being asked. So in Dade and Broward County right now, and no one please fall off your chair, there's 2.5 years almost of inventories of condos. A lot of condos and a lot of great pricing on condos. So everybody's asking me, I cannot get this condo loan done. And I keep saying, hey, yes, you can. Just give Ruben and the team a call because they got different products. Not every product is the same.
Yeah.
So
we're doing a lot of condos.
2.5 years of inventory, a lot of motivated. Actually, if you search for the word motivated in the MLS on those condos, almost 80% of them say motivated in the remarks. If you're listening to me, go to AI and look for another word. Look for a thesaurus if you're in school. Stop putting the word motivated in the MLS because It's an overkill. You're saying desperate.
Desperate seller? Is that the next one?
Yeah.
Yeah.
Yeah, desperate. Yeah.
Must
So,
sell.
we talk about condos a lot. We just did a class on condos, I think a month ago or so, or a few weeks ago. We're doing a ton of condos. Like you said, Ernesto, there are programs for everybody, as long as they have a down payment and understand the risk factors on the rate. So we are still doing a lot of what we call conforming condominiums, which are condominiums that fall within the guidelines that we can get the condominium approved. Not a commercial for CMG, but I always take a plug. I think we have the best condo department in the country. And we are able to do pre-approval of the condo before we get the contract. So if your buyer's looking for something and we have the documentation necessary to get it approved, we'll send it up even without a contract to our condo department and say, hey, this is eligible for a full review at 5% down, or maybe it's not a full review, but maybe we can do a piggyback where we do 10% down, a second at 15%, and we do a 75% loan to value. I know I said that kind of fast, but the reality is you need to call us, right? We're getting these done all day long. You don't need to become experts in mortgage. You just need to memorize my phone number and call me whenever you have a question.
So, Ruben, I'm sharing my screen right now, and I'm sharing the list of condos in Dade, Broward, and Palm Beach. And I have full, limited. So full review means we got to see the DNA, and limited is we want to know if the condo's still standing. And there's a lot of condos. When people say I cannot get condos financed, I mean, it's a lot of full. It's a lot of them that that full, but there's a lot of limited too. So I mean, there's a lot of product out there that you could be selling.
Yeah. And the reality is that there is. And the one thing that we have seen, so just as a caveat, I'm assuming you're looking at the Fannie Mae website. And if you are,
Yeah.
We still have to get the insurance, right? Because the insurance that can change really at a moment's notice, right? Every condo insurance comes due or changes, on their own. So that would be the only thing, as long as they didn't change the insurance. What we've seen in the past is that they're going from a 5% deductible to a 10% deductible. So even though it's on that list, if that were to happen, then it wouldn't necessarily be approved. Doesn't mean it won't necessarily not be approved, but we do still have to do some work. But there's plenty of opportunity. Like I said, we did one. We closed on one that was 5% down. It was a primary home buyer, and not only were they able to do it with 5% down, they qualified for first time hero. So they got their, I think, based on the sales price, was about 14,000 and change from Hometown Hero. So it's a win-win for everybody. But again, it's doing everything up front. Don't wake up one morning and decide I'm going to buy a house or I'm going to buy a condo. Let's get together and plan the process. And there's plenty of condos out there that we can help you with.
Okay, so if anybody wants to see the list, just send me a message and I'll send it to you. I got the list from one of the CMG team members, so I'll just send me a message. You can text me 954-646-5677 with your email address if I don't have it, and I will forward it to you. Yeah, because I mean I think there's going to be a lot of opportunity in that market right now. You just gotta, like you said, have the meeting, prepare a plan to attack and get it to the closing table. Next question I have is, okay, why are foreign national loans so expensive? And I don't know, I'm not going to say the name of the person, but I don't know what you mean by expensive. But
Well, I mean, come on, let's take a step back, right? The person doesn't live in this country. So it's not like we can go chase them in Colombia or Brazil or whatever. I mean, I'm being a little bit elementary here, but the reality is there's a risk factor. Everything is priced on risk. If a person has nowhere to go but Dade County Jail, a lot easier to find, So that's one of the reasons. But I don't find them expensive. That's the reality. I mean, if you go a full doc foreign national loan today, you're going to be at a price point very similar to a regular loan. So I'm not sure who you're talking to. Now we have been pushing away from the full doc foreign national loans more to a DSCR product, just because it's significantly easier for us and the borrower. I always tell you foreign national loans are very easy. The hard part about foreign nationals is the customers. they're not used to divulging as much information or documentation as we need. And that's why the DSCR program for them works. It's a little less documentation, but like everything else, less documentation means more risk. More risk means a little higher price.
So
Or
pretty
risk
much
is.
if the customer just wants to show up breathing, go with a DSCR loan and move in.
A little more than that. We no longer have those mirror loans like we used to have, right? When we used to put the mirror underneath their nose, and if the mirror fogged up, we give them a loan. We don't have those yet. I say yet, but Ed's looking forward to those.
Ed's looking forward to
Coming
this.
back.
Okay. Yeah. So I mean, I always say, and it's foreign national loans. You might think they're expensive, but if depending where you're coming from, the country you're coming from, they're paying 12 to 17% interest rates.
Yeah.
So if you do an 8% and the Florida, that's if you're comparing it to Brazil, you're doing half the rate. So they're getting a half the rate, and they're getting a product. So everything is how you present it. You're getting a product that is solid, a product that will appreciate, a product you'll be amortizing and paying down. So that money, that down payment that you relocated to the US to buy that asset, it's not losing value, it's not depreciating, it's actually appreciating yearly. Plus, it's increasing not just because of the appreciation, but you're amortizing, you're paying that loan. So I think that you're looking at it differently by that cash being sitting in U.S. lands, be having the protection of the U.S. federal government. It's doesn't matter that 8%. They'll gladly pay that 8%. So the next one,
Yeah.
I'm glad that Ed is here, because this one is actually one that has been stumping me lately. So every roof all of a sudden is over 25 years old. It's not, it's a problem. And there's a lot of those homes that are the entry-level buyer homes. So what can we do with these entry-level buyers who are already stretching to buy this property, for them to deal with this new roof issue? Can we do the roof after closing?
We can do a
do we need to replace it? Can we
no, we
patch
can
it? What
do,
can we do with those roofs?
we have a couple of options there. We could do a 203K, the FHA program, and we talked about that a couple of weeks ago. Or if they want to go conventional, we also have what's called the Fannie Mae Home Style Renovation Program, which works just like a 203K, where you buy the property and then the money to put a new roof on the house gets financed into the deal. So at closing, the seller gets paid, they're gone. The money for the roof goes into escrow, and then that money gets paid out. And when the roof is complete, then you have your end loan that just starts automatically. So it's pretty simple. As far as the buyer is concerned, they're really just qualifying for the higher amount. They're qualifying for the price of the house and the extra 50K for the roof. So if they're buying the house for 400 and we're going to give them another 50 for the roof and it's going to appraise for 450, we're qualifying them based on a sale of 450. So it's not that difficult.
Okay, so they're closing on the loan, they're taking possession, they're moving in with their dog and their kids, and then they hire, whatever roofing contractor, licensed roofing contractor.
Yeah, licensed and insured,
and then
GC, and we marry that contract for the roof to the contract for the house. We marry it together, and that's our starting number for down payment and closing costs.
Is it a timeline to get that roof finished? I mean, you have
Typically
2 months, 3 months, 6 months.
6 months for something like that.
Okay.
203K will extend out to a year, if there, something happened and they had to extend. But usually for a roof, that's done in 4 to 6 months easily.
Okay. Yeah, no, because I mean we're seeing that. Go ahead.
On a side note, as a lender, the only time the roof comes into play is if the appraiser notices that there's an issue, right? When the roof is too old, it's an insurance issue. So as long as they get insurance and they can pay for it, the lender doesn't really care. I want to make sure they know that. We're not looking at 25-year-old roofs. If the appraisal doesn't mention that there's an issue with the roof, it's too old, or it's got leaks or whatever, we don't really know about it. But we do obviously need the property insured. So as long as it gets insured, we're okay. I know it's, but I just want to be very specific with that.
Yeah,
but
so
if,
that's not the lending. It's not the lending, but the insurance is what creates the
yeah,
problem.
Problem.
yeah.
Yeah.
As a buyer, like if you're buying a house and you know it needs a new roof, instead of, trying to get the appraisal not to see that there's a roof problem, and then you try to do the roof later, if you don't have, the extra money sitting in the bank, how are you going to do the roof? You
Right.
know? But if you're trying to get in and just roll it all into one deal, then come out of the gate knowing that you're going to do one of those programs. So you could just boil it all in and then you get your end loan when it's all done without having to come out of your pocket for that money after the fact.
Okay. All right. So that one is, I think, was worth the price of admission, because we are seeing more and more in neighborhoods of Opalaca, La Pata, Miami Gardens. We're seeing East Miramar, West Park, where the areas where there's a lot of first-time home buyers running to. West Hallandale, we're seeing, a lot of homes with those, older roofs. And yeah, like you guys mentioned, it's not the lender problem, is all of a sudden the insurance is having a hiccup.
Yeah, yeah, they're killing
And but
people
like
on
you're
the way.
saying, if the roof is about to die, why not get it done? Roll into your mortgage and have a brand new roof, and the next 30, 40 years you don't have to worry about
Yeah,
Right.
exactly.
it. Okay.
If I can go back to
Um,
the condo question real quick, I think sometimes we become our worst enemies with condos, right? Well, they're hard, they're this, the maintenance fees are going up. Look, it's all true, right? It's all true. Everything that's happening, we're all very well of what's happening with the condo market based on what happened with Surfside, a couple of years ago and the new regulations. But they're still closing. There's still an excellent option for a lot of people. So let's embrace them. Let's just do them together. We can figure out a way to get these things closed and put people in, their first time home could be a condo.
Yeah,
Some of the HOAs are actually in decent shape. Some of the HOAs make sense. In other words, if you take what you would pay for reserves, what you would pay for lawn maintenance, insurance, pool maintenance on a regular home, and you start adding that up, water, cable, all these things you start adding up on a monthly basis. I'm not saying every time, but many times ends up being about the same.
yeah, I mean, if you got to pay for water, I mean, you live in Fort Lauderdale, you know how your
Oh,
water is.
I was happy when my bill came in at $300 this month, a month.
I mean, so there was nobody at home but you guys, right? That's why there was nobody at home but you guys.
Nobody was. And we got rain, so I didn't run the
Yeah,
sprinklers.
I mean,
And I heard he
yeah.
doesn't
So
shower every day.
he doesn't.
No, I don't. No, I can't. I can't afford to. Once a week on Thursdays, Thursday
Yeah,
morning, I
because if
work.
you add water, cable, lawn maintenance, iguana repellent, if
Right.
you add all of those things to it, you're almost at the same number. All right,
yeah,
one
Yeah,
last thing, and this one is from me. I had read I'm gonna give bad news to everybody. So Hometown Heroes ran out of cash. If you didn't jump into it, it's zero left. But I had read something from Tallahassee that the governor was committed. Governor was committed to fund it again. But I haven't seen all I read was that. Nobody gave me a date, an amount,
yeah,
anything.
yeah.
Mm.
So
So,
He's
same
so
committed
energy
though.
we do
here.
have a good alternative to that. I
Mhm.
mean, it is accurate. It did run out, but now there's going to be a little money trickle back in when things don't close with other lenders. So we'll get some of that money back in. But I'll let Ed talk about it a little bit. But just so you know, it's not as good as Hometown Hero, but it's actually for some people works. It's a program that's been around for a long time, but now they've actually gotten really competitive. And CMG is in the process of creating their own deal with them directly to get even better rates. Ed, you want to talk to them about the Shinoa?
Yeah, so Chenoa, we spoke about it briefly a couple of weeks ago on the call, but it works just like Hometown Heroes, except the second mortgage is repayable. So that's the big difference. So if they do offer a 3.5% down payment assistance or 5% down payment assistance, but it's the assistance is in the form of a 10-year second mortgage. So they do have to qualify with that second payment. The rate on the second portion is the same rate as the first. They're currently running between like 7 and 7.25%. And it's only for FHA loans. That's another thing about Chenoa. So it is an FHA product, DPA 5%, except it's repayable. But we're doing a bunch of them. We actually, I think we have about half a dozen of those right now in the pipeline, because one of the benefits is there's no income limit, which is big because that was a problem with Hometown Heroes, and you don't have to be a first-time homebuyer, which was also a problem with the Hometown Heroes. So Chenoa can be, pretty much anybody that can be eligible for the program. So great alternative.
And it's the same thing. They do the same. They put a grant on the property, and you only pay it at the end, or
no,
you got to make monthly
it's
payments
repayable. Yeah, it's a monthly payment for 10 years. So that's the difference. That it is repayable, and you have to qualify with that second payment. But it goes to FHA DTI limits for debt ratio. So whereas Hometown Heroes was limited to a 50% debt ratio, Chenoa will go up to the FHA max. So if you can get it through at 55, 6 debt ratio, it works. So we just have to get it through DU.
Okay. So and one last thing, just to give go ahead.
I was saying we've even done Chenoa loans because of the restrictions of the Hometown Heroes. So we couldn't get it under a 50% debt ratio, or we couldn't get them under the income limit. So we just flipped it to Chenoa and closed the loan.
Okay. So what is the FHA max right now, gentlemen?
Max mortgage?
Single family home purchase.
621.
Yeah.
621.
Mortgage, right? So it's about 635 purchase price.
Yeah, with the 3.5% down.
Yeah. Okay. Yeah. So for everybody telling me that there is no inventory, single family homes that qualify for FHA in Dade County, there is 1,958 for sale. Single family homes. And I am going from Dade Broward County line all the way down to the beautiful city of Homestead, Havana West, as Leo calls it. So there are 1,958 single. I'm not putting townhouse. I'm not putting condo. I'm putting just single family homes. You own your backyard. You can have your chickens. You can park the boat in the back. You can do your barbecue, your mango tree, the whole thing. 1,958 single family homes available, when 2 years ago we had 300. So there's a lot of inventory out there. There's a lot of product out there. Yes, does it need a roof? Yeah, but you can get the money for a roof. Do you want to get windows? Yeah, you can get the money for the windows. There's a lot of different programs. Don't shy away, because the house needs a little bit of lipstick. Lipstick is financeable. And with that, I am closing this session. Gentlemen, if they need to get a hold of you, what is the best way to find you?
So best way to get a hold of me is through cell phone. You can call me and you can text me. If I don't answer the phone calls, because I'm taking a shower probably, as opposed to what Leo said. But best number is 954-661-2790. I do return all my calls. Leave a message or text me.
954-661-2790.
Yes, sir.
All right, awesome. Everybody, thank you so much for joining us for our weekly Ask the Lender. If you have any questions about anything, I put my email address. Shoot me an email and I'll get back to you. Stay productive. See you guys around.
Take care, everybody.